Hello traders, this is Fawad Razak, market analyst for City Index. Today is the 16th of December. The dollar is still on the front foot, I think. It is flattish today, but the underlying trend is still clearly bullish, as indicated by the higher highs and higher lows, and the moving averages as well pointing higher ahead of the Federal Reserve rate decision this week. Now, as you can see, the Fed is expected to cut rates by 25 basis points to 4.5%. But this is all priced in now, and what the market will be looking for is indications about further rate cuts in 2025. And for that reason, the economic projections or the dot plots will come into focus, as too will the press conference from Fed Chair Jerome Powell that will be taking place half an hour after the FOMC rate decision is released. Also this week, we'll hear from the Bank of Japan. Now, previously, the Bank of Japan was expected to cut, to hike interest rates even. But the market is now no longer pricing in a rate hike from the Bank of Japan following some dovish remarks from a few Bank of Japan officials. And for that reason, the Japanese yen has fallen sharply in recent weeks, and that has helped to keep the dollar index supported. Now, the other central bank meeting this week is the Bank of England. They are also unlikely to change interest rates because of strong services inflation in the UK. But watch out for signals about potential acceleration in the pace of rate cuts in 2025. If we hear something dovish from the Bank of England governor, that could hit the pound. So let's have a look at a few currency pairs now. The pound has again found support from this bullish trend line that has been in place since October of last year. We did break through this trend line a few weeks ago, but we reclaimed it, so it's still there, but the underlying trend is bearish on the pound, as is the case on all major currency pairs because of a strong dollar. So I wouldn't be surprised if this trend line were to break down this week, especially if the Fed turns out to be more hawkish than expected in midweek. So the key levels to watch then, the trend line comes in at around 126 to 126.20 area. If it breaks down below that, then that could potentially pave the way for a run to 125, with the November low coming in just below that at 124.87. That could be the next downside target on the cable, potentially ahead of 124, and even the April low of 122.99, basically the 123 handle. So those are some key downside targets. On the upside, 127.15, this red line here, is a key level to watch because this level was support, broke down on Thursday, and now we are rising towards it. If we get a test of that level, we could potentially see some reaction. Above that, it's this area here, shaded in gray, between 128 to 128.70, where we have the 200-day moving average converging with price support and resistance areas. This area has been tested already, however, so we may not see the pound rise all the way to here again. But I wouldn't rule it out because we have key economic data from the UK, the Bank of England meeting, and the Federal Reserve. So there's lots of moving parts this week that could potentially impact this pair in any direction. So let's see how things will look like by the end of this week or near the end of this week, which could then set the tone for the latter parts of this year and potentially the early parts of next year as well. So we'll have a very good idea in terms of the directional bias on the cable in the following couple of days. Now, the euro dollar has also been trending lower. It recently tried to break below 105, but we haven't really accelerated away from that level. I think traders are waiting for the outcome of the FOMC before potentially committing, but essentially the path of least resistance is clearly to the downside still, and I would expect to see a retest of the November low at 103.33 in the event that the Federal Reserve is at least in line with expectations in terms of how hawkish they are going to be at Wednesday's meeting. If the Fed turns out to be a little bit more dovish than the markets are pricing, then that could potentially pave the way for a rally above the 106 resistance area, paving the way for 107 potentially, or even 107.80. So those are the couple of upside targets I'm watching in the event we see a reversal in the bearish trend. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.